Good morning, good afternoon, good evening, everyone, and welcome back to the breakfast show. We are almost at the end of the year, so there might be a special guest returning on the show later today if he or she does wake up in time. Anyways, good morning, everyone. Hope you're all having a wonderful start of your day, or maybe end of the day, depending on where you're watching from. We do have a couple of things we need to cover. We'll go over again the probabilities of a rate cut. We'll have a listen at a couple of analysts covering, well, their thoughts on what's going to happen or what they think will happen in 2026. We have some positive news regarding Novo Nordisk. I know some of you do own Novo Nordisk, so that stock is up pre-market. There is a pretty good reason why that has happened. We got some news on AMD Nvidia, and then we'll touch on a couple of extra things as well. Right now, if we look at the pre-market action, it's a bit mixed, I would say. It's not the worst thing. Some people, I mean, if you thought it would be smooth sailing, think again. But the Grinch, you have to understand, we are doing reverse psychology here. The Grinch rally, the Grinch is green, which means we want green. Santa rally, Santa is red. We don't want red, we want green. So that's why it's now called the Grinch rally. You're already touching on a very, very interesting topic that I did want to talk about. Maybe I'll anyways make a specific posts in the portfolio and in the community post as well. Because yes, this is something that some people have reached out after my last PayPal video. I've talked with a lot of people that know options way better than myself. And then I had a friendly conversation with Gemini to, well, try and understand the situation that I'm in, because it's clearly not the best situation. We were in a much better situation a month and a half ago. So bottom line is, yes, I am thinking of taking the losses and lowering the strike price across the board. I know I still said I have a long time until the 2027 ones expire, but that's also the point. Of course, it's never great to take a loss, but I rather take a loss and have a better risk reward scenario than just for the sake of, oh, I still have time, I don't want to take the loss, eventually take an even bigger loss, maybe 6 months down the line or maybe more. So one, I admit, made a mistake. Maybe I should have taken profits when I was up 100% or so a month and a half ago. Okay, maybe, but then again, I had no reasons to sell other than just maybe take the money off the table and let the rest, the house money, do whatever. Okay, fine. But back then I was like, finally the market actually realizes that PayPal is undervalued. And well, it only realized it for 1.5 days or so, but okay. Bottom line is, to answer your question, is I'm thinking about it. I'm basically thinking of selling the 2027 ones, maybe even the June one as well, the 100 and the 100s in January 27, and converting them to $70 for January 27. So yes, I will be paying, I would say, a bigger premium, but it is $70. I might not have the same huge upside that I thought I would have before, but I also don't need PayPal to do that much in 2026 in order for me to be making money and especially recouping the losses and making a little bit of money as well. So the strategy, again, I will write it all down in a post so everyone knows what I'm doing, and maybe I'll even upload a short video talking about this, because yes, I've talked about it for quite a while. And if the strategy just does change, I don't want it to change and suddenly, oh, you didn't tell us anything. No, I'm very, very transparent with my moves. I'm already saying I'm willing to take the hit to change the strategy, reduce the risk, maybe reduce also the upside a little bit, but at least I'm reducing the strike price, and we're still giving PayPal 12 months to go above, well above $70, when in this case it should be at around $80 or so for it to make sense. It's probably going to be an 80-20 split, so 80% will go to the January 2027 one, and then 20% to maybe $70 June 26 to be a bit more aggressive, but it's only a small part. And to answer this catalyst, I mean, every bit of good news for PayPal was not a catalyst. But if you're asking, there is, of course, the earnings report. We know Q4 might not be the best one for branded checkout, but maybe guidance for 2026 could be a bit better or not as bad as feared. That's one. Then before the next earnings report, we have CS. And in CS, they are expected to talk about the ads platform, something big that they're launching there. So maybe that could help it as well. If that's not enough, we have another earnings report, which will be in May, which again is going to be the first quarter of 2026. So they can update us on their own guidance for the whole year. We of course have the bigger tax returns. The big beautiful bill will have some positive effects on the economy. Maybe not as big as some think, but it will still have some positive effects that could help PayPal with regards to consumer spending. So I would say those are the catalysts. But of course, you can have negative things as well, which are, well, branded checkout growth does not recover, and the upgraded checkout is also slower than expected, and that continues to be slower than expected. You always have to look at both of the scenarios. No, I don't think that the World Cup will play any part in this at all, if I'm being honest. So that's basically it. Then China, Taiwan, TSM risk for Nvidia. We cannot be invested fully with the situation going on. I mean, this situation has gone on for quite a while, right? This is nothing new, and it's not just a risk for TSM or Nvidia. It's a risk for the whole semiconductor industry, but also the whole tech industry. Because if something happens in Taiwan, I can assure you that the whole stock market will crash and your portfolio will not be safe no matter what you own in the portfolio. But is that a reason why you should not have bought any semiconductors over the past, I don't know, 5-10 years or so? Probably not. Probably not. But there is also a big shift happening at the moment. There is a lot of semiconductor buildings in the United States. So there is a little bit of diversification happening at the moment. Then, looking at some probabilities here for 2026, January 2026, the rate cut is even lower than yesterday. We're now sitting at 17.7%. So it's quite clear that at the moment it's not going to happen, which makes sense. I think if the economy is in a good place right now, right, if everything seems to be under control, then there is no reason for the Fed to rush and cut even more. Of course, if the labor market, unemployment continues to go up, then maybe they'll be forced to cut. But in the meantime, they have this type of luxury to wait and see what's happening. Now, talking about the catalyst for 2026, one of them, negative catalyst, might be this, another government shutdown. Although right now the chance of that happening continues to drop a little bit. We're now at 29%. Remember last week that was closer to 34, sometimes even closer to 40%. So this is the current picture at the moment. Did we see GDP accelerated? Did we have some numbers that came out this morning? If so, put them in the chat. I'll pull them up. Thank you very much for that. Moving on to, let's do the price targets first, because we do have some price targets and some news related to China and AMD Nvidia. So let's do that first. You think I will never buy options again after this? No, I will. Again, I am getting options, as I said from the start, even with the Intel one, and the Intel one were very successful. I am learning. In this case, I'm learning by paying the price, but I'm learning, but it's not something that my portfolio will not suddenly be a 90% options and the rest shares. It's still going to be the majority shares. And then sometimes if I do think that there is a big disconnect and you might want to take advantage of it, then maybe options does make some sense. I'm also learning more about the whole selling a put, how that could be rewarding as well in the short term. So it's all a learning process for me. I never said that I'm an option expert, far, far from it. So we'll see, but I'm definitely not going to be doing only options. That is definitely not what I will be doing. It's just another tool that you can use. That's it. So GPU exports hopes to China could boost Nvidia and AMD earnings significantly. Renewed speculations over US approval of GPU sales to China has spotlighted upside for Nvidia and AMD. According to Raymond James, AMD could gain $500 to $800 million in revenue or 10 to 20 cents in non-GAAP EPS, mainly from China-compliant accelerators. Nvidia, of course, much larger, $7 to $12.5 billion in revenue and 15 to 30 cents in 2026 EPS upside. The firm noted uncertainty around approval timing, Chinese demand, and US export fees, but even limited shipments could be meaningful. Again, we know that the China business for now, for both of these companies, is zero. So any upside is an extra bonus for us investors. So we'll take whatever we can get. Moving on to Rocket Lab, and I do think that Rocket Lab is down pre-market because there has been some insider selling, but I mean, can you blame them? Probably not. So the stock, let's see, stock is down 6% pre-market, but we still have here a Needham note reiterates buy with a price target which he raises to $90, up from $63. The reasons for it, they mentioned. Rocket Lab awarded $805 million for 18, basically the satellite contract that we just, let's see if Jose wants to join. The satellite contract that we basically saw right now. Segment backlog more than doubles from 600 million to 1.4 billion, sees over $1 billion upside from additional sales to other primes, and focus shift to Tranche 2 execution, Tranche 3 ramp, and Neutron launch. Remember, the satellite deal was just that. It did not include launch. Now, who's going to be the launch partner? We don't know. But it's always good to know that this is just the start. Of course, Neutron, in my opinion, is still going to be that major catalyst for Rocket Lab, especially in the first part of 2026. And yes, right now, let me actually pull this one up. Rocket Lab is down. I mean, yesterday it was up another almost 10%. Now it's down, let's call it 6%. And AST was up 14% yesterday, and now it's down 6%. So I don't think we can complain that much. Is it? Yeah, extended. So we are having here a lot of names that are down pre-market, but we've just had a couple of names where it's the couple of names that have gone up quite significantly over the last couple of days, especially the NeoClouds, right? NeoClouds, even yesterday, most of them were up nicely. Applied Digital was down a little bit. Pre-market, they are down 2 to 3% or so. But yeah, right now, Rocket Lab down 5.5%. on the insider selling, and maybe could have been more if we did not get this $90 price target raise. Am I buying here? Of course, I'm not buying here. I'm not in a chasing mood. I already have a nice position. Plus, yeah, it is a very volatile stock anyway, so I think we should be fine. Let's see, GDP 4.3%. That is indeed not too shabby. Not too shabby. Meta is still, in my opinion, I talked yesterday about the Magnificent Seven stocks. We went over all of them. I also added Netflix and Broadcom, and basically looked at P margins, year-to-date performance, and all of that. I think Meta is still flying under the radar. It has a pullback. It did not recover as much as all the others recently. It wouldn't be crazy to see a Meta at $800 at the end of next year. Let's put it that way. This analyst partially agrees with me. He has a price target of $815. Still sees 23.2% upside for probably for the next 12 months. Now, the key takeaways here are as follows. Though they see sentiment risk, but expectations now better balanced. Encourage opportunistic buying on potential catalysts. 1, Q1 margin guidance clarity. Next, Llama model, which is supposed to be an avocado apparently. Meta AI updates, ranking relevance gains, WhatsApp and Threads monetization, and advertising automation. And then wearables and custom silicon option value add. Again, the whole wearables and all of it is let's call it a call option. So they're basing their price target on a multi-year DCF, 30 times 2026 PE, and 15 times 2026 EV to EBITDA, their estimates, within peer range given Meta's leadership, margins, and diversified growth. I think if you're looking at some, let's say, more value plays, again, value play, when you talk about Meta, I don't, yeah, maybe it is a value play. Would you agree or disagree that Meta is a value play or not going into 2026? Just like maybe Google was a bit more of an aggressive value play earlier this year, but will you consider a stock like Meta as a value play right now going into 2026, knowing very well that of course it is very much attached to this whole AI story, but at least it is a very, very profitable company at the moment. So let me know in the chat if you view this as a value play, and if not, let's say what other companies out there do you view as value plays going into 2026? I'm asking because I am planning a video talking about value stocks for 2026. I forgot to pull up to make the poll, so let's do it right now. Please do remind me to close it before the open. Let's do this. Voila. Voilà, poll is up. Okay. Let's start and listen to some predictions here. I'm not going to play obviously the whole 18 minutes. I'm not that crazy. I already listened to some of it, so I know where to skip. So Amazon, Uber, Salesforce, Adobe, PayPal, usual value play. Yeah, some people will say value trap. Amazon, is Amazon up? No, it's not up, but yeah, Amazon probably, yeah. I mean, I'm there with you. I bought quite a lot of Meta in 2022 when it was very much hated. First Solar, yeah, I mean, I talked about First Solar and Enphase right at the start of this year. Enphase did not play out. First Solar, I mean, they've been doing quite well. And it was always, if I had to choose between the two, First Solar is definitely the D1 because, again, the execution risk is much lower, less attached to interest rates dropping, less attached to I mean, personal homes that need solar panels. So made a lot of sense. Congrats to those that did pick it up, especially in the low $100. All right, let's hear what the people on TV think should happen in 2026. And I'll try and wake Jose up.
2026 will hold for your money. Let's ask our panel. Everyone here at Post 9 today. FundStrat's Tom Lee, iTower's Stephanie Link, and CIBC Capital Markets' Chris Harvey. Tom and Steph, both CNBC contributors. One and all, it's good to have you right in front of us on the desk today. All right, Tom. So, 2023, we turned in 24%. 2024, we turned in 23%. Pretty good this year, too, 17%. Next year, we fill in the blank with what sounds reasonable to you.
I think it's still possible to have a double-digit year. There have been 12 times in the last 100 years where markets posted 3 years of 20% gains. This year hasn't finished yet. Globally, half the time, markets do even better in the following year. So I think next year is a year where the debate's going to be, is the bull cycle over or is it going to extend? I think it's going to create quite a lot of volatility in the first half, but I think GDP growth stronger. We have a dovish Fed. Valuations are reasonable, so I think we end up exiting very strong.
Why a lot of volatility in the first half then?
Part of it is the Trump tariffs could get overturned. There is a possibility of an extended government shutdown. The nomination and then confirmation of a new Fed chair is going to take 3 months. That could be very controversial. I think all of that happens in the first half of next year.
How's that sound to you, Steph?
I think that sounds really great. The economy is on solid footing. We've been talking about that all year long. Last week, we got some really encouraging data with regards to weekly jobless claims. Inflation came in a little bit better. We've talked about the H8 Federal Reserve loan growth, lending. That's actually at a 9-week high, all-time high for loan growth. That's very bullish for activity overall. The industrial metals are at all-time highs. And you have global central bankers, including the Fed, getting more and more closer to the neutral rate. That's a good thing. And Fed cuts take a while. There's a lag impact, and I think that's going to bode well for next year. And then you have the one big, beautiful bill. $150 to $175 billion going into the consumer's hands, going into corporate America, so CapEx continues. You add it all up, and I think you have double-digit earnings growth. There are some numbers out there that are a little high, like 16, 17% in earnings growth. I'm not there, but I do think you're going to see low teens.
Mr. Harvey.
I think high single digits is reasonable.
Single.
I can't get to 10%, 12%, 15 just yet. Right. One of the things that Tom said, I agree with wholeheartedly. The first half, you're going to see a lot more volatility than you have seen in a while. I think people are sleeping on the macro risks, be it USMCA, be it the transition with the Fed. If you listen to Powell, now he wasn't cocky about this. He was very humble. But basically what he said is, I'll see you at the book signing. We have growth higher. We have inflation lower. We're back to neutral. We don't need to do anything from here. And 6 months, if you don't cut rates for another 6 months, that's an eternity in the financial markets. And then the last thing is, I think corporations are going to, after a good year this year, they're going to manage down expectations. As you manage down expectations, that puts a little volatility to the marketplace. And lastly, risk is priced very, very expensively, either in the equity markets or the credit markets. It doesn't take much to upset the apple cart.
You want to respond?
Okay, so we have two bulls on the panel, and then we have, he's not a bear, definitely not a bear, because he still expects high single digits. I know people will say, oh, he sounds bearish. He's not, he doesn't sound bearish, he actually sounds realistic. I don't know, did Amit's live stream crash? For one, it's not mine. For once, it's not my stream that crashes. And Jose slept in, but he's going to join pretty soon. So to me, I agree with all three of them, actually. I agree with all three of them. I think it's realistic to expect more volatility next year. I mean, we just had these results. So Q3 GDP beat, Q3 consumer spending also beat, which again should be good for PayPal, but I don't think that PayPal really reacts on any good news. Durable goods orders did miss, and core durable goods order did also miss. I did see that PCE Where is it? We also have some other news. So ADP private employers added 11,500 jobs per week. The previous number was 17,500. There is no forecast in those numbers. Then we did also see, where is that? First of all, US Q3 GDP price index rises 3.7%. The estimated number was 2.7%, and the previous number was 2.1%. The Q3 core PCE prices did rise 2.9%, which is in line with expectations. So those are the numbers that we're getting right now, which again shows us that things are, for now, doing as well as expected. Am I Amit's backup? No, I am white Amit or European Jose, depending on who you're asking. But no, I'm here every single day. But he does, I mean, he's been doing this for quite a long time. His morning show, so need to earn the trust of many viewers here. But it's fine. My goal in 26 is to have 1,000 viewers. We'll see if that's possible. But anyways, in 2026, you are still going to have a lot of questions that need answering. There's still, because right now, all of the results and the reports that we're getting, there is in some of them quite a lot of missing data because of that government shutdown. And so the following month, which is again the first month of 2026, that's when you're finally going to get a cleaner read on the situation. And then I do believe the market will start to react a little bit more, especially if it is positive. We'll just have to wait another month or so. And then, yes, you have the nomination of a new Fed chair. All of that process also takes 2 to 3 months or so. You have some effects that come into play from the big, beautiful bill. You have greater tax returns. So all of that happens in the first half of 2026. In the second half of 2026, in the United States, you, of course, have the midterms. So that also you should be expecting some volatility. But as we've seen before, the negative impact of a midterm year usually happens in the 12 months before. And after a midterm, the market is usually green. So, okay, again, something that you need to know. What has happened before might happen again, or it might not happen again. We will of course see. But yeah, I do think that first half of 2026 to me is still going to be somewhat of a good half. I think it's the second half where people will start asking a little bit more questions, but we'll see. We'll see what the market decides. So far, the data that we're getting is definitely better than feared, although some of the data is a bit incomplete. Now, funny enough, as you can see, the market is still not liking what we're getting. But if we look at what has happened on Friday, if we look at what has happened on Monday, I don't think we can complain when things are down a little bit. I mean, even my little PayPal here is down 0.14% at the moment. Now, next year, what we could also have is a bunch of IPOs. Anthropic, SpaceX, Databricks, some of the hottest names in the private sector, if they suddenly go public, could again excite certain pockets of the market. So let's have a listen here.
Well, 2026 could see some big changes for the IPO market, forcing some moves by some of the biggest players. Leslie Picker joins us now with the story. Hey, Leslie.
Hey, Joe. Good morning. Yeah, for years, many of the biggest private AI companies, think OpenAI, Anthropic, Databricks, have shunned the public markets, but bankers say that may need to change next year as the CapEx cycle crosses a threshold where private-only financings just become too constraining. McKinsey research shows that by 2030, data centers equipped to handle AI processing loads are estimated to require more than $5 trillion in CapEx. Private AI companies have been able to spend tens of billions of dollars a year on CapEx, but this next phase will require more funding, and likely that's through the debt markets. And it's more efficient and less expensive to access a wide range of credit as a public company. Now, there are a few reasons for this. First, having a public equity gives lenders more certainty on real-time valuation, which can allow a company to take on more debt with tighter spreads, essentially lower costs of capital here. Additionally, suppliers and partners typically sign 10 to 15-year contracts, meaning counterparties want to be sure there's financing durability over the long term. Now, to be sure, there is this looming question out there about how many of these companies can go public at the same time and whether the market will be able to absorb all of that supply. For example, if OpenAI raised at $1 trillion valuation, which is what's been reported out there, and floated just 10% of the company in an offering, that alone would be well more than all 340 IPOs raised in the U.S. this year combined, Joe.
I mean, she does raise a very good point here. If we suddenly have a SpaceX valued at over $1 trillion, if we suddenly have an Anthropic valued at God knows how much they're valued at, and then if we have an OpenAI and a Databricks, they're all planning on going public in 2026, well, where is the money going to come from? Now, we know there is a lot of money on the sidelines, but still, that's a valid question, because these are not small IPOs. These are going to be record-breaking IPOs for the market. And I mean, the more of these companies go public, the better it will be, because then you will have already publicly traded companies that are probably undervalued, because then you can compare, right? You will be able to compare these pure AI labs, LLM players to some other companies out there. You look at the growth rates, the profitability profile, the margin profile, and you could then say, oh, okay, if they are trading at God knows what I don't know, 50 times sales or whatever, which again, just because a company is trading at 50 times sales does not mean that your company should also be trading at 50 times sales. Probability of the stock coming down quite a lot is quite high. But would still be interesting to see what happens inside or under the hood for an Anthropic, for a Databricks, for an OpenAI, definitely. I don't know if they'll go public already in 2026, but Anthropic going public first is, I think, much better than an OpenAI, in my opinion. So yeah, we'll see what happens next year. I do expect a little bit more of an IPO, although this year we did have a couple of companies go public. But yeah, at the end of the day, if you are just a pure play LLM players, then yes, as the title here said, AI models race to commoditization. You need a better business model than just subscription
LLM. Tough year this year trying to keep up with all the incremental advances in AI. Steve Kovac joins us now with what to expect in 2026, given how busy and crazy this past year has been, Steve.
Yeah, Andrew, and look, there's this bubbling trend in the AI model race I've been kind of clocking all year long. We talked about that race between these models that, they do video or image generation. Some are better at coding than others or writing than others. They all improve, though, but they all generally do the same thing. And what we're really seeing here, guys, is a race towards the commoditization of these LLMs. And there are plenty of examples of that happening this year. I want to use Apple and Microsoft as sort of case studies here to show what I'm talking about. Neither of those companies have a real frontier model like OpenAI or Anthropic. So what they're doing instead is investing and partnering in those to make their products happen. Now, for Apple, of course, earlier this spring, they failed to launch that new AI version of Siri, and they started hinting that they're going to do partnerships with these LLMs instead. Now, Tim Cook was actually asked this last July on the earnings call if he thought LLMs were becoming commoditized, and he gave kind of an interesting answer here, commenting on that would give away Apple's strategy. But later in the year, when I met with him, I pressed him a little bit more on that, and he talked even more about partnering with these other LLMs. He told me, in addition to the current integration that you have on your iPhone now with ChatGPT, quote, our intention is to integrate with more people over time. Think about that. ahead of that big Siri launch next spring. Now, Microsoft, they've been hosting Anthropic models, and they are also investing up to $5 billion in the company. They just announced that last month. They're also started using Anthropic for some Copilot products in addition to OpenAI. Now, they also struck that new deal with OpenAI, which frees OpenAI up to work with other cloud providers, while Microsoft can work with more model makers. I spoke with Judson Althoff. He's the commercial CEO over at Microsoft last month, and he told me customers are actually asking for more model options in his products. He also said they originally invested in OpenAI to make that a standard. Now they're doing the same with Anthropic. Now let's look ahead to next year, what all this can mean and this commoditization in action. We're going to have that Siri, the new version with AI powered by a third-party LLM, likely Google's Gemini, although Anthropic has been in the conversation, and it could be a future where you just choose your own model within Siri. And also, I'm expecting to see Copilot adopt Anthropic for more features now that that relationship has tightened up. But look, it's becoming this sort of ultimate commodity. Users don't really see what LLM they're using. It's that product layer on top of it that is really going to matter, guys.
All right. First up, good morning, Jose. How are you?
Oh, pretty good, Neil. Good morning. Good morning. I slept in. My bad. I don't know. It's snowing here in Jersey, so I don't know if that's an excuse, but that's the excuse I'm going with because of the snow.
Why not?
I slept in.
Why not? So how's everything been? How's everything been? We have a couple of topics we maybe need to cover. I'll first answer here, Matthews. First of all, thank you for a super chat. Second of all, I guess it depends on the price. I guess it depends on the price and the timing of it, but it's definitely on the list for sure. So 2026 IPO markets. He just talked about something quite interesting with Siri becoming a sort of a service where it really resembles Perplexity, where Perplexity you pay for the subscription and then you can suddenly choose the models that you want to use. If that's something Siri is going to be, where Siri runs maybe first on Gemini, but then maybe you could use Siri with ChatGPT or something else. Do you think that this is just the way that things are going to work, where these types of companies will offer a certain service wrapped for, Apple, it's Siri, but underneath it, you choose whatever you want to use?
It kind of makes sense right now. Just in the video streaming service, you can get like the free version with the ads and stuff like that, or the very low cost version with the ads. And then you pay for no ads or just better content in general. And I could see kind of AI models going the same way as more compute starts to get come out. It's like, let me showcase to the masses. Let me do free models, something that might not be compute constrained. Maybe something I can use my old H100s, maybe my A100s or whatever into, where it's not going to be compute intensive, but I can use that data center, use that old asset still for something, and then save the bigger models, the models that, like you mentioned, are from different players, and using more compute intensive data centers to be able to handle that, and that's why it's paid. So it's not impossible. I don't know if we're still there yet, though, Neo. I think a lot of free stuff is going to be. It will not happen until we get a lot away from the compute constraint place. I think right now a lot of these companies, OpenAI has said it, Meta has said it that no matter what, they're still compute constrained. I think OpenAI had that weird video that the guy talked that they had to choose between releasing something to the public or taking or their research and development team. And I think that issue is going to continue to be there. So I don't know if 2026 will be the year for that, just because I think it'll still be compute will still be compute poor for overall market.
Do you think Apple, because we've talked about Apple, we've hated on the valuation side of things. The company, the business is still a very profitable business, but do you think Apple has done the right thing where they did not have or did not spend hundreds of billions of dollars on CapEx? They just, you know what, we have our Apple ecosystem, we have our services, we are probably building something with Siri, but it seems like they are going to use Google Gemini or something like that. And that's just how we are going to play this this AI game, because why not?
I mean, for Apple, I think for Apple, they have to definitely go with outsized player, at least at the beginning, right? I think they has it been officially announced about Gemini, Neil, or is that
Not
just still
officially,
more
but I mean, all
officially?
the
Okay.
rumors are quite are leading towards Gemini.
Yeah. And so I think that's the way Apple has to go around it now for them to Um, I wonder if they're also working on a custom Gemini model that you can run locally. That would be the other way around it, right? I think they're gonna have to choose just how they did with ChatGPT, where certain things you can run locally and certain things you're gonna need to be able to ask, especially since Apple has kind of like you want to make sure you give permission for everything. Um, you're going to have those two models, and I wonder if one of them is going to be in the free side and one of them is going to be in the premium side. Is it only going to be like local models, something super small? I mean, Nvidia just recently released a model called Nemotron, and let me just showcase this thing really quick. Um, and it's Nemotron Nano, and supposedly extremely good. Let me just but there's give me one quick second, you know. Let me just zoom in. Let me share screen. I thought this was extremely interesting. So I could start seeing other players maybe instead, maybe just developing based on open source models as well. Um, so this is Neotron, and this is from a website that they recommended. NVIDIA recommends it. It's called Artificial Analysis. It's like a third party benchmark. And the thing I wanted to show Neil here is the price of NVIDIA Nemotron Nano right here is it's the cheapest model out there in open source per 1 million tokens. Um, so first I wanted to bring this up because I remember just a little bit less than a year ago, the market was going crazy when DeepSeek was extremely cheap, and they thought that that was going to be the end of the AI era. But NVIDIA is coming out here with even cheaper models and cheaper models. So it showcases that as models get cheaper, you're going to be able to do more use cases with them, depending on maybe the actual size of that model. And something like this, I think, could probably run locally because it is their nano version. I think it's like a 30 billion 30 billion model, but it's only using like 3 million at a time when it's calling some of its agents. But yeah, I wanted to showcase. I thought that was crazy. Look how cheap that is compared to some of the big players out there. Obviously, you don't get like all the you don't get the same intelligence. You don't get the same tool usage. But there's someone out there that will be able to develop something cool with the model that's cheap.
I mean, staying on that topic, first of all, it is just right now the first time that they release it, because it's a very small one, so they can always improve it. We've seen, I think, yesterday the information or the misinformation coming out with a report talking about Nvidia and their cloud division inside the company having some restructuring happening. So we've talked about this at the start of the year, right? Talking about Nvidia, you know what? Okay, we've talked about all of the competitors trying to make their own chips and rely less on Nvidia. And then we said, yeah, but Nvidia maybe one day will say, you know what, actually, we might actually launch also a completing cloud business. Do you think this is something that's happening right now, slowly but surely?
I don't. I think I think originally, Neil, Nvidia was worried about ASIC players. I don't think that's the case anymore. I really don't. I do think Nvidia, if it wants to create its own cloud unit, it can definitely do it. Because I don't know where we've talked about it, Neil, but it's about $40 billion to build a gigawatt of data center. We've heard something around those ballparks. NVIDIA has a 75% gross margin, and they're pretty much a full stack. We also know that about 80% of, we've seen it from Iron's spreadsheet recently, that about 80% of the actual cost of the data center is the GPU infrastructure. So in theory, NVIDIA could be building gigawatts of data centers for $10 billion where these other people are playing $40 billion. That alone allows you to have amazing TCO. Even if you charge a little bit cheaper on clouding solutions, you're going to eat up market share extremely quickly. But I don't think Nvidia wants to do that. I think lately it's been, even though all these players have made a lot of progress in their ASIC, I feel like the partnerships with Nvidia have grown even faster and faster and stronger. And I think that's because Nvidia just continues to develop at rapid levels. What Nvidia, in my opinion, is really trying to do is, instead of becoming a cloud unit, I think is trying to subsidize the cloud unit to help the overall AI ecosystem. And what I mean is, instead of being the next Azure or Google Cloud, I think they want to help build the next OpenAI, because the next OpenAI is $1 trillion company that's going to be able to spend hundreds of billions of dollars on NVIDIA's chips. And the way they do this is by building up these neo cloud players. We've seen it where they have these amazing partnerships with companies like Nebius. One of my favorites is CoreWeave. And one of the things with these CoreWeave deals is they have some type of backstop deal that many people believe it's a way to control the environment. But what's really happening with these deals, they have one with CoreWeave Neo with a $6.2 billion. And the bears go crazy over this deal. It's like, look, no, Nvidia is giving a $6.2 billion defense on CoreWeave so it doesn't fail. But what's really happening is Nvidia uses this compute, and they're paying $6.2 billion or whatever for this compute. But if a small AI company that can't rent out AI infrastructure for 3+ years needs something for a month, 2 months, 3 months, normally they can't get it in a lot of places at this type of scale. Maybe they can get a few hundred H100s, a few hundred H200s or something, but at the type of scale that they would need to build something crazy, they usually can't get it because you need to be reserving it for 3 to 5 years. So Nvidia has given CoreWeave money where they can stop them usage and be like, Nvidia, I'm going to take your supercomputer away from you for the next 3 months. So one of your potential next unicorns can take that compute and build something pretty cool. So I think right now, Nvidia is just trying to build the overall AI ecosystem. And I think that's smarter than overall fighting for the cloud space, because if they wanted to fight for the cloud space, I think they would have taken it already. And I think that's a last resort. I think right now, Nvidia always says they're a market builder, not a market taker. And I think this showcases that exactly. They're building the overall AI ecosystem. But if they could, they could take that market, in my opinion.
Okay, fair enough. I mean, you just talked about some neo clouds or AI specialized cloud players, as a Nebius co-founder likes to call it them. We've seen some crazy moves over the last couple of days across the board. Right now, pre-market, all of them are down. But then again, I mean, HUT was up 14% yesterday. On Friday, CoreWeave was up over 22%. So do you think we're going to continue to see these types of volatile moves for those names until we get to the next earnings report across the board and we get a little bit more clarity for these names?
I think we both would say yes, right? I think this is going to be a volatile market. Every week there's going to be another story, right? I think we had the Michael Burry story, we had the OpenAI massive investment story, we've had the not enough power, we've had the Google Gemini story, and all this in probably the last 2 months. We've had like various different stories, and I think we're going to continue to hear that. I think this market is evolving so quickly that if you start looking at things that maybe you were looking at a month ago or 2 months ago, things are completely shifting. So you're going to hear these bearish theses. The markets are going to continue to be very volatile. But that is why I think it's important to understand how this technology continues to innovate, because that's the end data, right? If you're still waiting tens of minutes for ChatGPT to give you a research, if you're still waiting, if you're still paying massive amount of money for some of these AI models, it's still their compute constraint. So I think that's short-term, extremely volatile, Neil. Long-term, extremely bullish. And earnings will prove us will prove that the AI thesis is still intact. But unfortunately, the market forgets about earnings a week later, and then we go back to the volatility. So, I mean, it wasn't even a month after every big player announced that they were increasing capex dramatically, and then everybody started to worry again about the AI market. There has to be something that changes that scariness or that worriness. And I don't know if that will happen this year or 2026. But what needs to happen, Neo, is where at least for companies like Oracle, for companies like CoreWeave and Nebius and all these other AI cloud neo clouds, is when revenue has accelerated at a rate higher than capex. And I do believe that's possible. There's going to be a point where your revenue is going to be much higher than the capex you're going to be spending. But until that happens, I think the market every quarter will be worried.
Okay, no, fair enough. I think, again, like you said, we've had an amazing earnings season, and then suddenly the market got fixated on two things, right? They got fixated on, first of all, Oracle jumped like crazy, and then suddenly it's like, CDSs are rising, Michael Burry, Oracle debt, capex, no free cash flow, like all of the things that we knew about before, but suddenly it was very, very fixated on only the issues and not on the potential upside. Same with CoreWeave. CoreWeave, of course, did get hit because of that one-time delay that they've told us about, which if in a month and a half or so they report and they say, look, everything's solved, it's business as usual, especially for 2026, or maybe even on track to exceed expectations, whatever they can tell us, sentiment will suddenly change again. There are still some questions again about, yes, Oracle and the free cash flow, and maybe TikTok can help with that. OpenAI, some questions about the $1 trillion in future plans. I don't think we're going to get some answers about that anytime soon. But all of the rest of the ecosystem, we spoke about this, I think, last week in private and for the full, when that Goldman Sachs analyst said that 90% of that $700 to $1 trillion in build out comes from cash generating companies, and only 10% will come from the debt market, like the debt that Oracle has to raise, or Nebius or CoreWeave and all of those. So still the large majority comes from super profitable businesses right now. But yeah, like you said, the market is a bit schizophrenic. It's like one day we love it, the next day is like we completely forgot about all the good news. It's only bad news from here on out, which for some companies, fine. Maybe they don't deserve to be trading at the levels that they're trading at, but to put everyone in the same boat, I don't think it's is a fair assessment.
Yeah, I agree, Neil. And I expect there's a bit of an echo there. Neo cloud players to I think the overall market is going to do well, but there's going to be issues. Breaking U.S. set tariffs on semiconductors from China at 0 for 18 months. I don't even think, yeah, interesting. Are stocks moving on that? I wouldn't think much movement happening there. But what I was going to say, Neo, is the market is going to be extremely volatile for those players, just like any other market. When you have a lot of new players, when you have a new industry, you're going to have some winners, you're going to have some losers. So while I am bullish in the overall ecosystem, I haven't researched every single company, so I don't know if every player is going to succeed. So always do deep dives, do your own research on those neo clouds and all these AI plays that are happening throughout the market. Neo clouds, I like that.
Yeah, so the stocks are barely moving on that news, but yeah, it's supposed to increase in 2027 to a rate to be announced not fewer than 30 days prior to that date. So we'll see what that will be. But it says here it's an additional duty on top of existing Section 301 tariffs. So what were the tariffs right now on semiconductors? I mean, it's an additional 0%. So I don't know what that will be, but I guess zero is better than more than zero right now in this market.
I wonder if this is going to be good for companies like Analog Devices, or there's a little bit of echo, Neil. Because a lot of these tariffs were only if you were buying the individual chip itself. But if you were buying a complete system like a laptop or a PC, I don't know how the tariffs necessarily work because it wasn't considered a semiconductor at that point. It was considered some other type of consumer tech. So I just don't know how much this is really going to impact anything in the how much impact this would have to semiconductor stocks. I think it's more of like a cool news and a cool headline, but in actual results on top and bottom line, I don't know which ones. I have, like during this earnings, I didn't hear much concerns about tariffs. Oh, because of tariffs, my gross margins took this hit. So unless there were semiconductor companies that complained about that, then I don't see this being much of a movement there.
Yeah, and it seems like the market doesn't really care that much at the moment. No real movements pre-market on this announcement. Some macro data came out. Most of them are pretty good. GDP growth and all of that seems to be going in the right direction. We did have some company-specific news regarding Novo Nordisk. I know some of the chat does own that name. It's up 8.8%. Pre-market. The reason is basically this. The Wegovy pill was approved in the United States as the first oral GLP-1 for weight management. Someone asked the question, how does that help the business? Well, it helps the business because they are going to be the first one that will probably be able to sell it. So it's a new type of revenue growth for the business. Instead of injections, you will just take a pill, which I think most of the people that use it prefer that to injecting themselves on a probably weekly basis, maybe sometimes daily basis. The results are also not that bad. So that's one of the catalysts, I guess, that investors were waiting for. You're going to end the year with a positive announcement for everyone that's been buying a Novo under 50. You're already getting a nice little dividend, and now you're getting a little push here towards being the first commercially available oral GLP-1 pill here. So good news on that front for this company. As for the market itself, pre-market seems to be a bit mixed. The title says Grinch rally because the Grinch is green, Santa is red. That's basically what a genius told me yesterday in the chat. So I thought I would run with it. And I was like, okay, actually that makes quite a lot of sense. So let's...
So today's the Santa rally, it seems. We had a crazy Friday. Right? I mean, even yesterday was nice, but Friday was wild. It was wild. It was insane.
I mean, Friday was crazy. I mean, CoreWeave was up on Friday because one of the Department of Energy inclusion that they're going to work with them. So federal government type of revenue stream, great for CoreWeave. And then the overall sector, I mean, TikTok, Oracle helped with that, but being up on one day 22% was definitely a nice way to end the week, especially after a horrible couple of days and weeks for the neo cloud players. I mean, if we look at CoreWeave, yes, it seems like we did bottom in November, then went all the way back up to $90, but then yeah, in 1 week we crashed to $64. Well, not that great. I did buy a little bit here, and then I think you played the option game, right? I did just pure shares.
Yeah, I have plenty of shares right now that I don't. I rather do a little bit of an option game doing them.
Let's get ready to open the markets. Let me do this and wait for the markets to open. My gong is lost in the mail. It should have arrived already, but
Did you
still
buy one?
nowhere to be seen. I bought like a mini gong to ding to open the market instead of a cowbell. But
Wow, professional around here, Neil.
exactly. So you can do the ding 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 if you want.
No, I can't beat that, Neil.
You have to. So ding 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 ding, bing bing bong
Ding,
bing
ding,
bong.
bong, bing, bong, ding, ding, ding. Let's get this started.
Yeah, man. Since you left, we added sound effects. We added a lot of things here to up the level of this market open. And it seems like we are a bit all over the place at the moment. There is way more Santa than Grinch today, with Novo being up 9%, all the rest barely green. The ones that are red are AST, Space Mobile, Applied Digital, BMNR. I think Rocket Lab should also be here at the top because, yeah, Rocket Lab is also down 2.2, which is better than the 6% pre-market. It did get a price target upgrade, but insiders have also sold some shares. But then again, this is a stock that has gone up significantly over the past couple of weeks. So let's have a quick look here at NeoCloud players. Completely forgot about Core Scientific, if I'm being honest. Since the CoreWeave deal fell through, I completely forgot this company existed. But it still sits at $15.70. It's basically down 0.2%. Nebius is down 0.7%. CoreWeave 2%. Same with HUT. Same with Cypher, Iron. White Fiber is up 4%. Applied Digital 2.8%. Do you still own small positions in the other ones, or
No, it's
purely
just two
CoreWeave
play.
and Nebius?
Well, three plays: Nebius, CoreWeave, and White Fiber. Those are the three. Again, like my CoreWeave position is like 3 to 4 times bigger than my Nebius position, and my Nebius position is like 3 or 4 times bigger than White Fiber position.
Okay,
How about you,
so
Neil? Are you
we are
running anybody
hoping.
else?
Me?
Yeah.
I am still Nebius CoreWeave Iron.
But I do have option plays on Iron.
Ah,
Yeah.
okay.
But the other ones are stocks options too, mainly stocks.
Yeah. All right, fair enough. You need to head out, apparently. Your wife
Yes, I
said
do.
you need to head out. So, anyways, thank you for hopping on. I'm going to check a couple of extra things here, but I already wish you and your family a
Are you on
wonderful.
tomorrow? If you are, I'll join you again tomorrow.
Tomorrow. Yeah, we can do tomorrow. Tomorrow is half a day, so we can do a quick pre-holiday stream as well. So I'll keep the wishes for tomorrow.
All right, sounds good. All right, Neil, chat. See you guys tomorrow then. Neil, I'll probably talk to you throughout the day.
Yeah, for sure. Bye-bye. All right. No, we do not. I mean, I don't own Ouster. Still haven't really looked at it. Jose looked so disappointed. No. I mean, he knows. I mean, he started off with CoreWeave purely. I started off with Nebius purely, and then we both also added what the other owned. So NeoClouds are all down at the moment. Okay, chip names are. Is it still? Yeah, it's a bit. Chip names are all green right now. So nice switcheroo here for the chip sector. As for the fintech players, we have a Shift4 green 1.3, and then the rest barely green. MasterCard, dLocal, Visa, Nu, Amex, even PayPal is flat, and then the rest are red. Klarna is down 2, Hood 1.5, Webull 1.4, Sezzle 1.3, Firm 1, same with Block, Chime, Dave, SoFi, Pagaya, they're all down 0.5% or so. Big tech companies, what do we see? Amazon's literally, well, Amazon is going to be this type of Google one where suddenly it's going to move quite aggressively towards $300, but that one is up almost 1% right now. Then the rest is basically flat, with Oracle being down 1.1%. As for the other names, we have, so Uber is basically flat, same with Rubrik, although Rubrik and Salesforce down 0.4, 0.5%, Oscar down 0.7, of course, Jose comes on the stream, that's what happens. Duolingo 0.7, where's Mercado Libre? Is it green? It's a little bit green, it's just under $2,000 for Mercado Libre today. Did you talk about Micron? Today, no, I did not talk about Micron. Micron is $281, up 1.84%. I don't know if it was a question in the chat or under a video. But yeah, someone asked me about Micron and the low PEs. It's too late to buy. Again, look, Micron has had an amazing year. It's true that the PE is quite low for a company, but I mean, this is basically Micron, crazy run up. But it's always going to be a low PE type of player for now. Until they prove us otherwise, I don't think you're going to see this as a 20 plus times PE. So for now, they're doing everything that they should be doing. They're growing, the prices are going up, so margins are improving. So I took my profits and I am not regretting it because I still have a position and I enjoy the ride on the way up. Plus, it is a luxury position to me to have this type of name and then see what I will do in the... the poll. I told you guys to tell me to close it, but I close it right now. I don't think that much has changed. So we have 40% still say green, 38 red, 22 flat. Okay, not too shabby. Not too shabby, I would say. So yeah, with Micron, it's a luxury position, I would say for me. When would I exit Micron? When would I exit Micron? Probably if I really feel it is overextended and the business starts to decelerate, or there may be some signs of deceleration or margins cannot go higher, then I'd probably sell. Or if this one continues to outperform and some other names out there that I own underperform, yet the business continues to do well, then I might just use it as, you know what, this was a great story, played out much better than expected, but now purely risk-reward wise, I prefer the other story. But of course, I'll let you know when that happens. Let's see, neoclouds are all red other than Cypher, but okay, not such a big deal. PayPal is now down 0.2%. Great. Big Tech has not changed. BMNR got a lot of, I saw Tanner talk a lot about BMNR recently regarding, I don't know, some emails and some things that Tom Lee has said about the price of Bitcoin dropping in the first half of 2026 or something like that. To be honest, I mean, in my opinion, there are just better opportunities, I would say, in the market at the moment. ETH is down 2.4%, okay. And Bitcoin is also down a little bit at the moment. But yeah, with BMNR, the story has not really changed. I mean, it is just under the 200-day moving average, closer to $30 right now. But the story is still the same here as it was before, right? The thesis is still the same. It's reaching 5%. It's trying to buy as many ETH tokens as possible as at a reasonable price. And then, yes, trying to collect dividends. Nothing has changed other than the stock price and the price of Ethereum, because the thesis is still the same. You need to see a huge change in the financial space. Everything needs to be tokenized in order for the huge long-term bullish thesis to play out, which was, I don't know, 60,000 or something like that ETH. But even if it's not 60,000, let's take 20,000 or 10,000 in the shorter term. The thesis is still the same. But it is getting a lot of attention. because there is Tom Lee involved, there is crypto, etc., etc. So I guess that's why. Rocket Lab with the huge reversal here from being down 6%, now up 1.4%. Crazy. Thoughts on I'm not touching this at all. Realistically, 75 and 100. I mean, realistically, with PayPal, I don't. Realistically, it should be at 100 today, right? At 100 today, it would still be undervalued. But it's not. It's far from it. So it depends on the way management talks to Wall Street and explains the story. Because if we can start 2026 with management that is way more excited about what's going on at PayPal and explains the whole story, then we can be at $75 before the earnings report, or maybe even just after. Is it possible to end 2026 at $100? It is possible. I mean, that's why I initially bought my call options. We were on our way. But then the market decided to take it down. But yes, we can be in 2050 and PayPal is still at $60. I don't think, actually, realistically, it's not possible, because if it stays at $60 for another 6 years or so, it's going to be a private company. So let's have a look at a couple of other names here. Amazon is yeah, it's been at this price for the last 6 months or so. I mean, last 6 months, if you take away the huge crash here, it's been the same price for a year now. If you bought a year ago, you look at it today, it's exactly the same. It's exactly the same. Thoughts on Costco. Look, I don't shop at Costco, but I know that everyone that has access to a Costco in their neighborhood or not that far away from where they live, they usually only go there. They have a membership at Costco. They love to shop there. It is a very good company at very good prices. The stock is expensive for the following reasons. It is a type of defensive play. It is a play where you know the company is going to grow. You know the company is profitable. And you know that there is no AI risk here for Costco. The risk is the fact that it was trading at a 50 PE or something like that, close to it. Is it a name for my portfolio today? No. Is it a name for a portfolio for someone that's much older than myself, that doesn't need that much risk? For sure. For sure. Same with Walmart, actually, and maybe even an Amazon, but I believe with Costco you're getting some dividends, right? Let's see how much. So great company, which is already a very, very good start. If it's a great company and customers like to shop there, you're already in a very, very good place. The yield, 0.6%. Okay, so not the greatest dividend play, but okay. It is what it is. But it is an expensive one, of course. Question. When you seriously believe in a story but happen to be short on cash at the moment and suddenly see the stock run up, what do you usually do? Okay. Do I own the stock or do I want to own the stock? I assume in this scenario, I already own the stock is down and maybe I want to buy more, but I'm short on cash and I see the stock run up. Or maybe I don't own. Which one is it? If I don't own the stock, look, if I don't own the stock and I'm short on cash, I want a new story. Okay. So if I don't own the stock and I'm short on cash, and it is a better story than the rest, then I'll probably raise cash by taking profits of a position that I have. If I really, really want it. then if that didn't happen, and let's say the stock was at 100, down from 150, and now it's back at 100 and let's say 110 or 115, so it's up 10-15% or so, I assume I would still like it. I assume I would still like it because I don't think a 10-15% move will change much. I might not buy it as aggressively as I would at 100 or under it, but I'd probably still be buying it. But the first part of the answer is, I think, more important, is the fact that if I really like a story, I wouldn't mind changing another story, another position that I have in my portfolio in order to be buying this one, which is what I said with the Netflix. If I really, really wanted to have Netflix in my portfolio, I would have probably bought it already and changed it with another company in my portfolio. You can set the 10 bagger for 2026. I mean, believe it or not, there are still many companies that we talked about this year that have not really moved much, right? A Shift 4 can return almost 50% in 2026. An Oscar can do the same thing. PayPal, if PayPal starts to move, it can do the same thing. Pagaya, dLocal, even an Iron or a Nebius, if any of them announce a huge deal, or suddenly they start accelerating the build outs, and they can get more GPUs online that start generating actual revenue for the company, these stocks can go up significantly. Now, a 10 bagger like the one we did with Open Door, that's a tricky one, because this was just being lucky, and just being lucky to find the next meme rally before it became the huge rally that we've seen. And of course, exiting on time. But anyways, if you bought at $1, $1.50, and you didn't sell at the top, you sold at $8, $7, or even at $6, it's still a 5x in record time. We talked about Ondas at the start of the year. I didn't own it, but I know a lot of you did, so congrats on that. But yeah, my goal in 2026 again is to just try and outperform the market. Again, it would be great if I can find a 10 bagger, but if I can find stocks that go up 50% in a year, 30% in a year, I think I would still be very, very happy. I would still be very, very happy. And then yes, if I spot a huge disconnected stuff and that can suddenly gather all of the attention of the meme lords, then that would be great. It's just extra cash to play with. But yeah, 10 baggers is something that you get over the longer term. Rocket Lab is one of those stories, of course, but it took a while, right? The stock did stay around $5, $6, $7 for a long time, and then yes, it went up significantly. We've seen the same thing happen with with a SoFi, right? SoFi stayed from April 2022 all the way to October 2024 in this range, in the range between $4.5 and around $10. And then, poof, it has gone up significantly. You had 2 years of accumulation under $10. If you accumulated during those 2 years under $10, you have a great average, and you're up now more than 2.5 times. Of course, you could still accumulate more shares along the way. Averaging up is again something that you need to make it click in your mind. And then eventually this 2-bagger can turn into a 10-bagger 5-10 years down the line. People need to understand that you do not usually get 10 baggers in a year or in a couple of months. I think a lot of retail investors have become accustomed to seeing their stock go up 100, 200, 300, 500% in a matter of sometimes days, if not, weeks or months. It usually never happens. So we should go back to the normal stuff, seeing stock appreciate over time based on, of course, business fundamentals. I would also agree that more recently, yes, there are just a lot of these businesses that have gone up significantly, the stock, because the business has gone through a huge fundamental change. So, okay, I agree. I agree with that. No, until they start monetizing their users, because from what we are seeing in the financials and what we're hearing from people is that people like the platform, but most of them use it for stock screeners and watch lists, and that's not a profitable business. You need people to deposit money on the platform and start investing. When we're going to see that the users are getting monetized, then yes, maybe we could be seeing the stock start to appreciate and have a hood-like rally, although you cannot compare Webull with Robinhood, because really Robinhood, despite all the negative marketing that they got in 2021, they turned it into something very positive, which is everybody knows about it without them needing to market quite a lot for Robinhood. Plus, they've got the prediction markets now. It's growing outside the United States. They're doing extremely well. Thoughts on First Solar? Same thoughts as at the start of the year. I think it's a good play for this whole energy upcycle. And it's not really an expensive stock, although it did go up significantly. I agree. Which again is why we should maybe think about everybody does what is best for his portfolio. My portfolio for some is super aggressive. I think it's aggressive, but it's okay aggressive. Google, SoFi, yes. Rocket Lab is up there, Nebius is up there, but I still think I paid an okay or a pretty good price for most of these stocks. And then I still own some very good big players out there. 11 cents dividend from Meta. I also think we got an Alphabet dividend, I think, last week. That was also very nice to get a couple of dollars. Thoughts on dLocal? I'm still very bullish on dLocal. I did see that someone at the start said that there is a new independent board that was formed. This is again something that they told us already in August, so just something that needed to be formally announced. But business-wise, I still think that this is, yes, a multi-bagger in the making. Is it a 10x next year? No, but over the longer term period, I do believe this is a multi-bagger in the making because it is a company that grows quickly and is already profitable. Plus the market cap is quite low. There is you guys keep spamming this name in the chat. What the heck is this? Whoa. What is this name? Nobody knows about, no, of course nobody knows about Climb. Well, what's Climb Bio? $350 million company. This thing went from $1.07 to $4.70 in a matter of, what was it? 2 weeks, almost 2 weeks or so. No idea what it is, but congrats if you bought it at $1 or under $1. Well played. Yeah, I mean, I have Google, I have Meta, I have Alibaba, which I still view as a value play. You've got Micron, which is up there. Of course, some people will say that SoFi is still a meme stock. I don't think it's a meme stock. I think it's a very, very solid company. And then, yeah, on the riskier side, Nebius, but is it really riskier side just because it has gone up quite a lot? I don't think so. Then Shift4, extremely undervalued. Rubrik, solid company. So it's not like I own nuclear and quantum stocks in the portfolio, and that's about it. Chlamydia. It depends. It depends. I currently have, what did I say? 5, 6, I think. You thought I would say 6 and the number that comes after 6, huh? Never understood this stupid trend. I know I'm at 4.7 at the moment because I did buy some last week. I got $13 in dividends from Meta. Woohoo! So yeah, 4.7. Could I increase it a little bit? Potentially, yeah, potentially. But it depends. It depends on your situation. But yeah, maybe increasing it a little bit. This year I started with a lot more cash, which turned out to be the great play. I mean, I think I started the year with 12% or so. 2026, maybe I'd like to see it go to maybe 6%. Did I sell? Yes, I sold it a while ago to buy a bit more of CoreWeave. If we didn't have the pullback in CoreWeave so aggressively, I probably would still have my BMNR shares. But again, I am going from one story to a better story, in my opinion. That makes more sense for me, since I owned already more CoreWeave and I just wanted to own even more and lower the average a little bit. No, I use Keytrade. You could use interactive brokers, yes, for sure. I just use Keytrade because that's the platform I already had, so I just use that. But yeah, interactive broker is definitely a good option. I also have PayPal. But PayPal I have more options than actual shares now. But yeah, I still have shares. Uber also, I think it's a value play. I don't own United Health anymore. I have Oscar. But if I still had United Health, then yes, I would definitely consider that as a value play, for sure. Yeah, no, so I own even more Meta, Amazon, Mercado Libre, more Google and Tesla. That's all in the retirement portfolio, which I don't touch. So there's no point in me covering the same thing each and every week. It's 5 positions that have been there for quite a while, and I don't touch it. The portfolio that is public is the one where I'm a bit more active and a bit more aggressive. I mean, a lot more aggressive. If you look at the other portfolio, it's all mega cap companies that I don't touch, and Meli is number 3 in that portfolio, behind a Meta and an Amazon. Amazon was previously number 1 in that portfolio. Thank you very much. Wish you and your family as well a wonderful, wonderful Christmas and end of year, start of a new year. Hopefully we will have lots of good things to talk about in 2026 in our lives and in our portfolio. Staying healthy, of course, is very, very important, and probably the most important as well. First of all, congratulations on your newborn. Congrats. Max 7. I mean, there is a Max 7 ETF, but I think the norm for everyone is just to go with the index and not really having to worry about it. So yeah, VOO or something like that should be good enough. Should be good enough. Let's see if we've got some other news that came out more recently. Probably not. Probably not. So market-wise, still the same as the start of the day. Barely any green. Novo Nordisk, congrats to the holders, up 9% right now. As for the rest, we have a lot of stocks that are down under 1%, and then we have some stocks that are down now. CoreWeave is down 5%, Nebus is down 3%, Pagaya 2.4%, Duolingo 3% here as well. Oscar is down 1.8%, Rocket Lab is really all over the place, was down, then up, now down again 1.7%. Let's see what the VIX does, because I think yesterday the VIX was very, very low. 40, yeah, I mean, even today it's not that high. Tomorrow is half a day, so don't really expect something crazy to happen, especially not this week or next week. I do have some videos planned. I know I know a lot of people are already traveling, so I don't expect a lot of interactions with the video. So yesterday I dropped a Mac 7 video, plus Netflix and Broadcom were included in that as well. And the upcoming ones are going to be about value stocks, growth stocks that I'm probably thinking of buying even more, and stocks to sell. I think that's always a good video to talk about stocks to sell. Although, as you know, in these types of videos, it's more like when to sell than selling today. I know people like to have their hand held and say, oh, you have to sell your stock today. But no, it's again going to be a video about a way to think about when to sell a certain stock. So I'll give a couple of personal examples, and then maybe we will look at some other names as well. So a couple of exciting videos to end the year. For me personally, the YouTube year has been a pretty big year. I'm above 100K thanks to all of you. Started live streaming now, yes, on a daily basis. Hopefully we can grow the live streams in 2026. We have consistently 500, 600 viewers, depending on a mid crashing or not. But I think 500 is now the average. For the morning stream, I know the morning stream is very packed on YouTube, but I rather do the morning stream than just midday when I have to change my whole daily schedule here. But yeah, we'll try and grow that in 2026. 1,000 viewers, I think, is a good goal to have. I am trying as hard as I can to actually, to bring some executives on the channel, but it's harder than what I was expecting. Maybe it's because it's the end of the year, but they're not that responsive, the companies and their investor relations and communications channels, but we'll try. I do have some wild cards that I might have to pull, but maybe it's worth it. Maybe it might be worth it. I'll try and bring also maybe some people from the sports world. As you know, I love sports, the teams, the business. So I'll try and get some people from the sports world as well. Probably first from F1, and then we'll see. What happens after that. If part number one works, maybe some private companies. I have a list of people that I want to have on the channel. As you know, anyone from PayPal would be great. I'd love to talk with people from Mercado Libre, the local, Uber especially. Revolut CEO, I'd love to have him on as well. I use Revolut. I think it's one of the biggest private companies now in the world. So would love to have the Revolut CEO. And then sports-wise, I'll try and work on Bruno Fernandes to come on the channel. That's going to be quite difficult, although he is injured right now, so he does maybe have some time. But first, maybe F1. F1 is going to be more feasible, I would say. If Chelsea goes public, probably. I am a shareholder of the Chelsea ground, right? You can buy a share of the grounds. I just have one share, which would be funny if we actually move stadiums. Then I don't know what will happen with that. But yeah, if Chelsea goes public, I'll probably just buy a share or something like that, because I don't think it's actually, I do think we are a much better run business than Manchester United. Buy football team stocks? No, I would like to buy a football team. That's my huge future goal. Owning a football team, like a soccer for you Americans. That would be That would be the ultimate goal. Yeah, same here. When I look at MU, I think of Manchester United. But fortunately for me, Micron performs much better than Manchester United. So, with that said, have a great rest of your day. For those of you that are already on vacation, holiday, tuning out, Merry Christmas to all of you that are celebrating. Happy New Year's, early Happy New Year's. And if not, we'll see each other tomorrow. We shall see each other tomorrow. Probably not Thursday and maybe Friday, but we'll see. We'll see. So have a great rest of your day and adios.